Welcome, punters, dribblers, traders and investors. We've had a few days off. We've had a lot of other good stuff going on in our lives, keeping us busy. But lo and behold, we come back to it today, and one of our premier holdings in the dribbler portfolio was pounded 40% today. So one of our, I guess, better ever days. Well, not better ever, probably one of those great days. So had good positioning on it. And that is Snap, of course, which we've talked about many times about the BS, the dribble factor, and all that goes with it. So down over 40% today. It was down. I can't remember, it was down 55 or 75% before the number, or for the warning yesterday. So anyway, without further ado, remember, not financial advice. You should get your own advisor. You should read up about it and all that before you start investing or trading in markets, and trade at your own risk. Some would say the same thing you do when you're gambling with some of the behavior we see. Anyway, without further ado, we got the glorious Madavi here. Mega Johnny lurking in the wings somewhere, hanging out with G, working out a new formula there. So without further ado, let's get into it. And of course, no real surprises really from the reaction if you've been following us on Snap and on the bear market rally. And what we've seen is these big bear market rallies. We saw it again today. Brutal sell-offs, and it comes back. Brutal. So there's two things going on there. We've obviously got shorts that are taking it in. Diversification across the indexes. We see some things going up. And constant bottom fishing and averages. You notice that the moment you see any kind of bounce, the dribblers, particularly on the fib twit, come out in force, mocking and all that sort of thing. Different sources of that, which is kind of mindless, really, when you think about it. We were saying today, like, if Snap bounces 100%, it just goes to $24, right? So just think about how much people are underwater. And that's just one we know. We could go on and on about all these stocks. So let's get into it. If you recall last week, we had that nice double bottom on the S&P. And we carried on for that. Then we had the sell-off today, and we went back to test those levels, which we'll go through in a moment. So state of the markets is oil sitting over 110. We just had the API number out. All this stuff is on Traders Community, and we are brought to you by traderscommunity.com. Sexy stuff. So the S&P all the way up to 39.53 cash. The massive Russell at 1769.50. Nasdaq, which took a beating today. These have all recovered somewhat, but 11,811. Vol 29.25 on the Vol X, and Natgas, massive big rally, just sitting underneath, just 20 cents underneath that high of was that last week or the week before, just over $9. You've got low storage going on in a lot of these energies. You've got summer coming up. You've got all these different variables, LNG and the rest of it. Okay, so let's get into the SPOOs, the mighty SPOOs. So we're going to start off with that like we normally do. Then we're going to talk about the Nasdaq, because that's really where the damage was done. So if we look at the SPOOs on a weekly basis, we talked about this last week. We had, on Thursday, we tested a double bottom, and then we got back over this swing, which I think if we actually did the medium here, you'd find this is going to be the median line, potentially. We don't want to put our house on that just yet, but that's the potential there. And you can see the green spug. You go to the daily, you can see it even clearer. And so what we had was a break of the double bottom, accelerated, and we closed back over on Thursday. We had extenuating risk on, was taken off, added, I meant to say, on Friday. She had a rally. We spat with tanking, so it gave us a real nice sell, and then it came down. It could not get back to these lows. So that was telling, right? That's on daily, and we ran off hard off them. So that's what's going on in some of these markets. And you're getting things like Walmart that we put on last Thursday from length perform really well, for example, today. So now you need a mixture of our bear, the dribblers, whatever, once they get unwound. So Snap's a good example. And then you got the market churning money in the so-called defensive plays, things that are really overdone. And the way to play them generally in something like Walmart was very cheap. Vol meant cheap calls for that stock versus the market. Well, I say very cheap for given what the market is. So if we look at the 5 minute here, you can see, hang on, bear with me 1 sec. Hang on. Yep, so you can see on the 5 minute, so this was the breakdown. This morning you saw it sell off hard, and you saw it stall around here at the 1/8 level, off plus 1/8, so you see the full move, if I was to bring that over. You can see the full move. Actually, let's go to an hour. It might be clearer what we're talking about. So here's all what you saw in the daily. That minus 5/8, right? Remember that big sell, off minus 1. So that's like a massive spit. Then we came off here. We gapped down with the whole snap, crackle, spew, whatever they're calling it. We came down in a perfect three ways. We came down inside that minus 2/8. Remember on the daily, these are those levels. Right? False break. So we're back testing all this. And then we got back over the cloud. So that was your little rally, which gave you a really nice trade. Okay, let's bring on, so we know all our levels here. Let's go back to the daily. And you can see what we are. We're right at the tanking. If we get away from here, potentially you got all this. I wouldn't hold your breath for that with what's going on. But you got to be aware of all sides, right? The problem's obviously a bear market, economy collapsing. Just look at how bad that report was out of Snap, right? And there was others. Abercrombie and Fitch was another one. Just general. And you've got the Fed speakers out trying to cross-current each other, I think maybe to confuse the market. It's kind of part of the game. Okay, let's look at Nasdaq. Let me bring it up for you, mate. 1 sec. So, what are you thinking about the old Nas today? Let me find a 5 minute chart, might be better. You there, Madabi?
Yeah.
So here's today, very similar to the SPOOs, except a lot weaker, obviously. It bounced off them. It actually gave us a signal to buy, better than the SPOOs. Down there at minus 3/8.
I mean, I was short most of the day until the end of it. I had a little bit of strength, and like last couple hours. But I'm gonna watch it and see how it does, see if it fails. But it's kind of choppy. It's good. It makes good moves. You just got to catch on it. But I would rather stay on the short side of things.
Yeah.
And see what the next move is. So if it continues upward, I'll look to reduce some of this, but still holding on to a chunk of it and go from there.
Well, yeah, so that's a good point. If you got a view, based on your charts and fundamentals and all that sort of stuff, there's nothing wrong with just trading from one side. So if you're bearish, you trade from the short side. You get these setups like minus 3/8. There's nothing wrong with just taking profit and not going long. You don't want to get frenetic, right? Huh?
It's more like reducing risk.
Right. That's what I mean by doing that. Yeah. So people tend to get confused with that. Like I see the dribblers it's funny how they just mock traders, really, because short and long. Because all they ever is ever long, and the only time they're short, they really don't know what they're talking about. It's kind of scary, really. But, well, if anyone listens to them. But just simple stuff, you have a plan, you have a strategy. You can't go into this stuff blindly. And you can see what's really going on with Nasdaq. Very different to the SPOOs. Just look how weak it is. It couldn't even get over this. over the week. That was that bounce Thursday, Friday that we played. And then we've got this big gap here. So they're going to gun for that, machines, but they got a lot to get through it. And if you look at daily, see, if we just looked at the SPOOS is right at this tanking. Look how much weaker the Nasdaq is. This is a daily chart. So much messier. And you also see it broke that double bottom, that thing there. And you got all these wicks and wicks. Now, if you're a bullish persuasion, it's not selling off. Well, the other flip side is it's not exactly holding up either when you see the individual shares. So the other key is, if you notice, a lot of we don't chop around in futures. And so we just had a couple of good plays. They worked out. Snap, is one we're talking about. We had Pinstrip. Unfortunately, we got out of that last week. That was another one and we didn't add. It was like $20 or something this morning. Was it 19? And it didn't hit it. So that's the trouble, is that these are low. You got to look at the short. You got to. So you think they're going to bounce, but like, for example, remember when I bought some of that Snap down at like just around 14 because it's down so much, and that was locked in the lowest price at 10 or something, right? The rest were obviously up a lot more, but it never bounced. Maybe 3 cents. Remember that trade? You gave me hell for that.
Man,
I was donating, so you got to donate a little bit. But jokes aside, though,
remember what I ate today.
Yeah, I mean, the jokes aside is that if you're in some of this stuff, is so much supply and top heavy, and they're losing money, and you don't want to be in the wrong one. And what I'm seeing is the market, the retail, or the people that haven't seen the down, whatever it is, they're constantly trying to find something to buy. And they overpay for them. You see it, particularly in a lot of these Nasdaqs. But anyway, let's not go. So I think that covers up pretty well. Let's go on. Instead of going about that, let's look at some of the other stocks. So just a quick overlay, given we didn't do it Friday and Monday. You can see Russell's still right in. We got this red flag. You can see that. If you remember when I just showed you the S&P, that had a greed spike. These other two dribblers do not, right? So it's important. We also see energy continuing to rally. Even little P10, one of our favourites that we muck around in, you can see how big they are. I don't know if that's a true. I'll have to look. Down $1 there. But if you go through them all at the aftermarket, you'll see these patterns, right? So today, before we get in, we had a bond market today, a bond auction, sorry. Bonds been rallying most of the day, since, when was last week? 20th. You can see how they've been rallying pretty much there. Those who like to see the yield, you can see that. So this is a combination of safe haven and no growth, right? And we had another really bad housing number today and stuff like that. And we had Toll Brothers report after the earnings. Let's look at some of the favorites. Here's Tesla. Tesla is at significant lows, 628. If we look at this on an hourly, you can see what's going on. Elon's got to be loving that bid for Twitter with the nonsense of this Snap, right? It's all the same stuff. The reality is, in my opinion, for what it's worth, if he doesn't buy Twitter or bid for him, it's a lot lower. So what we've seen, this is a 60-minute, just all scrunched up. You can see that we broke through all these levels. So we went from minus 1/8 at 680. Elon sold here, and they bought against him, right? He's like, well, I'm telling you I'm selling. And he sold twice. And so it went all the way to 1120. From 1120, we had a 1-2 up to 1180, and we're pretty well sold off all the way here. So it's like $400 straight. And here we are at minus 2/8. So we need to hold this, but if you want to take this as 6/8, we still have room to go. Okay, Apple. I'm just doing these because we didn't look at them, David. Then we'll look at what we're actually mucked around in. So if you look at Apple on a daily, you can see what we talked about last week on the weekly. This was a big cloud, and we're doing all that work. Isn't that identical to the S&P? So you watch these together. We have the Apple tanking, which has been in control since it broke 159, right? So 1, 2, 3, that's your guide, okay? That's your guide. And so you can see the work inside the Murray levels. And see, this is significant. If you scoot over here to October, that's why you got all this work. We had this false break. So what you probably had was a lot of put buying here for people that can't sell their longs, be they a mutual or however they cover it. And they obviously vol was really high there. And so there we got a bit of rampage. That acts as support in the meantime. Okay, so after the market, let's look at Nvidia real quick. They got earnings tomorrow. So Nvidia is just sitting. It can't seem to get over itself from this low where it broke up from back in June of 150 odd, rallied all the way to 340, and we're back at 160. So let's just be black and white about this shit. That's nearly lost, it's lost more than half its value, right? So that's the reality. So we can go on about, people go, these companies this, freaking that. This is why we can't stand dribblers. We're telling you to buy up here, not sell. Now they're telling you, they're gurus and all this shit. Look where we are, excuse the French, but they do kind of annoy us. Charlatans would be a nice way to put them. Come a chameleon. Is that the song Kim I was singing today?
What did you do?
I know where you're going to go with that one. Good one. Yeah, I lost the money for the singing lessons. Okay. All jokes aside, this is really, really massive levels, right? Because all this money, we've come back here, and if we look to weekly, look where we are weekly. We're underneath this cloud, punters and dribblers. Plus 3/8 is a spit. Glorious short. Glorious. So this is 5 waves, so it can do an ABC, but oh my goodness. And so selling begets selling, right? People tend to sell their good for their bad. You saw what Snap did. The thing couldn't get over itself. So on cue, let's look at bloody Snap. Hey, let's look at the weasel.
Yeah. I've been saying that dribbler thing is going to go to nothing.
Yeah. So we've been pretty hardcore bearish on this for a while. Those looking at the podcast, the man himself, the glorious one, has been bearish on it since Adam was a boy.
Oh yeah, I kicked my ass pretty good last year.
And so it's been a bit of a get even. On the other hand, I'm a little bit more on the conservative side of things. I waited for the market to break. And so obviously we're not. So that's the key to it, right? When when it starts going in favour. When this year, so that we're kind of joking about last year, but where we really turned it up a notch this year was at the end of last year, October, November, when we put together our dribbler box pretty well. Started to, and then we had good insight from what the dribblers were buying from one of the master dribblers. You'll notice a lot of what we saw, we're like, wow, okay, we'll show that. Basically stuff they were buying. But so this all here, this gap, this run up to plus 1/8 coincided where the market was ignoring what Apple was doing on iOS. So at the same time, unfortunately we didn't hold it. We shorted stuff like TTD and stuff like that in that digital advertising space. Here, this gap down was one of their earnings, I believe, one of their big warnings. And so we had, and we'd love to say, actually, you might have been short up here, Madavi. I think you were. I think you did get all this gap, actually, mate. But I kind of got into it here when after Madavi kind of held my hand figuratively and said, look, dude, you need, and then so we just felt it's a great trading vehicle, as we've said many times. And the fundamental story was just, there was this island reversal here. I think, was that their earnings? No, So they had an earnings where in one session it gapped down, like the earnings came out, it was 28 to 22 and rallied. So this is where we really loaded. So we had a little bit here between us, not much. This is where we really loaded up. And we took some here. So it must have been here. So here, this is what told me the market was really done, not just in this. Was it here, Madavi, where I covered some of the shorts? It got overfilled and it cost me like $1 just to get out of it. That was here, right?
Remember, it was, I'll tell you right now.
Was it either here or here? Wasn't long ago, like 1 or 2 weeks ago.
Let me look at my stuff.
But that made me keep some on short, a decent amount.
Here's a big joke about this, right? And the quarter before it had earnings, so it was, what was it? Was it actual?
Was it this one or this earnings? I think the one where you're talking about December. So that would have been here.
Yeah, it was. I'm trying to give you the date, right? So it was on July 22nd. What's the date? Hold on. Let me blow this up. Hold on 1 second. I got it right here.
Okay, while you're talking, I just want to point out something to the punters and dribblers that plus 1/8 on a weekly to minus 2/8 was the exact bottom.
May 18th, I believe, right?
Which one?
It was May 18th.
Yeah. That was the day. No, it wasn't that. No, it was up here around 28. It might have been.
It says earnings per share reported. All right. May be different from the company's reporting, actually, but well, it might have been. So I got this. Let me look at it.
But it's been a series of missteps and stories. And at the same time, the owner's been selling, I believe, right?
It reported earnings, right, the quarter before, and it blew it out, and they had the secret sauce for Apple's privacy thing.
Oh, that might be this one. That's this one, right?
No, yeah, it was probably. Wait, is that last year? So that would have been in October or something, or November or something like that. Right.
Yeah. So this is this crap.
Well, it ran up to $40 right here. Yeah, this is it. This ran up to $40. It was down here, and this was the Twitter shit or something that came out and dragged over there because Twitter sacked their earnings.
Right.
And this ran it up, and then came their earnings right here, and this all the way down. That's it.
Yeah, and there she wrote. So here's the other thing. So you can just hang on it if you're Warren Buffett or something. But short. Well, he's going to be shorter. But you know what I mean. So once it starts working and it's still working and it's following, look at how this is a beautiful work of art, technically.
So So let me finish.
This is a great trade. Yep, go ahead.
So they come out and they said they have the secret sauce. And then the next quarter, they miss and the stock sold off, and they're like, oh, shocked, but the quarter before, sorry. And they said, we're not going to need no more money and everything. They raised $1.2 billion, right?
Yeah.
And then the next earnings that came out, it was a loss, and they were like, oh, it slowed down more than we thought, but it's going to get better, right? We got the secret sauce that no one's got with the Apple privacy. Right? Yesterday, the guy comes out, he goes, everything's gotten to shit. No secret sauce, they lied, just like usual, and here's where we're at. And this is what I told Mate. These guys are bullshit.
And he's been on them for for over a couple of years now.
Before they were able to hide it because the money was there and every asshole jumped in and bought it, believing what these guys say. So, it banged me out some cash. So now it's time to get all my cash back.
So one thing you may notice on this chart, this is one of the very classic technical, if you're a technical analysis person. So this is what's called an island reversal, right? And so this happened, and so a lot of people, this is one reason why we just waited for it to bust. So he had a bit, you actually did really good there. If you go July, is that, yeah, 20, so July last year, you see this gap up, where there was probably earnings. But it doesn't really matter. It doesn't really matter. Then you had this gap down. You can see the massive island it left. So that's a classic reversal pattern. You see a tiny one here as a buy, right? See this little wick? Down then up. But just think what that really is, and look how long it was. It's almost like entrapment, right? You got all these people long here. And you can see the way it's dribbling down, right? This is a classic pattern of a dribbling stock. That's why we say it dribbles, right? So it means all the time the people call it averaging. That's why it dribbles, right? So, but this is a classic. So they're entrapped. You saw, like I said today, there was some we bought back early, and it was just relentless. We covered some of it at the end too, but we're trying to stay decent. You'd expect some kind of rally at some point, but how short do they got to get? Now, you see something last year, we saw some stuff like BBBY and other stocks that really got beaten up. There's always that potential, so you never ignore things. But this is a mess, the nicest way to put it. Okay, so after we had earnings today. So, yeah, look at those levels. Hope we explained a little bit how we think and how not to get caught the wrong way. Look. Listen to dribblers if you want to go the other way, basically. I mean, the same people make fun of Gartman and all these. They're worse. At least those people have a go, right? And actually having a trade. Gartman and Kathy and all these. So, what's that saying? Don't be careful of throwing stones or whatever. Glass houses. Anyway. So we had Nordstrom, which we tend to trade most earnings. It can be a real good one, and it's usually a good fader. And so that was what happened today. It popped up. We were able to get short, but we sold roughly between, I think the best was 24.80, but averaged around 24.40 to 60 between us. Anyway, this comes out. It's a retailer. So already we were intent on going one way on this. It gapped up. We had a quick look at the earnings. Yes, it said it was up, but it was up because they sold a building or something for 20 mil, right? Also, notice what it did. It filled this gap from the 17th, right? So the sell, and then since then, I've covered it. It held this 22 area down here. It actually got down 1960. Just for overnight risk. This is one that does weird stuff overnight. If SPOOs are up or down, analysts are heavy into these sort of stocks. So that's Nordstrom, JWN. You can see on the rig, minus 3/8, minus 2/8. The top was basically here. Someone got lucky enough to get short up at 25.50. That was too quick for me, mate. So what else did we trade? Wendy's. So Wendy's.
Love it.
So after hours, Wendy's. We all know Wendy's. That's Dave, right? Was it those ads? Dave, the old guy? That's Wendy's, right?
Yeah.
I don't.
WEN.
So McDonald's, Wendy's, all these sort of stock. A lot of people like them because of the franchise value. They like them because of cash. McDonald's is kind of famous for them. I guess real estate. I can't say I know a real lot about these guys, but we can tell you what happened. So there's just a lot of stock in this, I think. So this is COVID. COVID, obviously people stopped buying burgers, it looks like. Went from 25. I'm not sure why this is so much lower than McDonald's. My guess is, so don't quote me on it, that there's probably a lot more shares, right? Anyway, 25 down to, $6 and change. It rallied with everything. It had a spike up here. I do not know why that is, 29. From that spike in June. So this has only just come across our desk. So we played it just before we came on. It dribbled down and it closed today at 16.27, right? So plus 1/8 down here. So basically a 4/8 move, so a half a measure move, and you can see what it's done. That is a weekly. If we go to the daily, we can see what it was doing, right? It rolled over and it's just been selling off. And it's probably got a lot to do with depression of the economy, all that sort of stuff. Anyway, and also the cost inflation. So these guys, fast food, they've got to pay more for their employees, more for their food. Profit goes to staff, not as many people have as leads money. So we get this pattern. Little pattern forming. And look where it went to. 2.8 from 8.8. Okay, after hours, what happened? What the hell is he talking about? So remember, we showed you where it closed. That's 16. After hours, it popped to 1940 out of nowhere. It looks like it went higher, actually. And it's consolidating here. So there was, well, actually, I'll leave it to you, Madabi. You know more about it, what's going on. I was just showing the technical picture.
Some guy, one of the insiders who has shares in the company are basically they added to their shares looking to take over the company. So with that is going to be, demand to buy the shares at this higher stock price. So it's looking good.
Right.
So I thought some could be a nice little swing over here to like 23 bucks I'm looking at. So that's where we're going to go.
Well, while you were sleeping, we were trading. We had JW Nordstrom, we did that short on, and Wendy's, a guy came out and doubled his holding to 40%.
No, I think the 40%, what was it? It was like,
I thought you said, yeah, fine dining, mate, fine dining.
I think it was 24%.
I missed that.
I thought it went through. Yeah, you were sleeping. So 19%. I thought you showed me the 40. Am I wrong?
On a potential acquisition by Trans. All right, yeah. So
Transvestite.
Wendy's shares jumped 17%, 1905.
What's Wendy's? What's
her? Wendy's.
Wendy's, WEN. It's up in front of you. It's on the screen.
I think you had to dinner one night, but I'll pay this time.
Hey, anytime you want to buy me Wendy.
So Trans Fund LLP Management owns about 19%. I think they upped it to like maybe 37% or something. Yeah.
Whoa.
So here's the daily. So daily, remember, is at the close, right? So the close is 627. We just looked at it at 1850. So look what stopped it, the Cajun. So from a technical point of view, and plus 2.8, remember algorithms don't have emotions. So they've taken profit on that. This is very similar to a lot of algos, our secret sauce. And our secret sauce isn't like Snapchat's one, is it, Madonna?
Oh, no.
So we know it's been up here. We don't know. We can't say we're experts on it. But they're going to put a value on it. You would think that's a reasonable target in here. If they've owned 20 and they buy another 20. As I said, this just came across our desk in the last half hour, 40 minutes.
Yeah.
We haven't had time. We don't know where this guy is in. We don't know the profitability. We really don't know anything about Wendy's, except they have a really good bacon burger. Double Whopper kind of burger. He loves it. He loves them. We love them. One of my sons will bang two of them down, no problem. So that's what we know about Wendy's, right? And we could dribble all day about those burgers. And you will dribble if you eat them all over yourself. They're glorious. Anyway, we digress. So that's one play we're looking at. We're going to look at a little bit more after we finish this podcast, see what we're going to do with it. But that is a play that's in. And obviously it's got a little bit to do with the response from the company, other investors. Of course, if it's a takeover, of course they're going to say it's too cheap. S&P. So this thing will follow S&P over looking at this chart, right? Let's look at Macca's while we're on here, because that's always a favourite, right?
Which one?
Macca's.
Macca's,
mate. Macca's. Mickey D's. Come on, what kind of bloody American are you? Come on, dude.
Oh, he loves the Nordstrom, but I just loaded up some more Nordstrom.
I'm trying to short the same at 23.
Then the mighty Nordstrom. Okay, so let's look at Macca's, stay on track. So Macca's at the end of last year hit an all-time high, right? So that was, I'm pretty certain it's an all-time high. So 271 we sold off in massive ABC to March with the market. Remember, that's what just makes us laugh. And we were big on how they window dress this to perfection. And all these dribblers are buying it. Anyone who's a bloody trader, just look how overbought you are on any of this crap. Knew it. And that's why we were done with non-traders at this point. We let a few in. I mean, it's kind of like letting a thief into your door, some of these people. You know, yeah, come in. So anyway, massive ABC, right? Massive. Goes down to 6/8. Very straight run. So we are now correcting this. So Macca's has done a lot. This sell-off was, I think, when they pulled out of places like Russia and all that sort of stuff. You know, then you got the same problem, higher wages, higher costs. But look at Macca's. This might be why this guy's buying it. So over the last month, Mickey D's has run from, and everything's been selling off, right? It's been running from 228 to 245. These guys have dividends and all that stuff. So looking at that, and we go back to Wendy's. I can't even remember the name of the company that owns Burger King, but someone will know it. So Wendy's hasn't had that pop. Look, so Macca's is already up here, right? And this went a lot lower than Macca's. So there must be something going on with Wendy's specific versus the others in their space, I would suggest. So there we are right now, 1855. And that's pretty well all we got. Let's go on to oil energy. I mean, just want to go through that. This is the beast. Remember, we have said repeatedly, this is a 3 or a 5. Now look at this. Remember, if this is a 3, which should be 1, 2, you can't go over this level. So we're almost over that level. So the alternative would be this becomes, this is a 3 of the 5. In other words, this isn't 5 of 5. But look at where it is. So if you go beyond that, you got to look at 4/8 in corrections. You're talking 930, double correct. So that would be, it puts you into this sort of crazy territory. Right? So keep your heads on. What I've noticed is this hasn't recalculated, which is unusual. That's because of this powerful move down here. So it's confusing, and why you got to keep both options open. Weekly on Natty, look at this. So this just gives you and you can't blame bloody oil companies for this. And this is Natty, I'm sure that they got the blame. It's all these policies showing, but they were even before the war, right? So here's the war. Putin's invading. Here's where it was before it, and then constantly it's gone up since. We could go on all day can dribble all day about nukes and all that and ESG. We're just looking at the charts, okay? Let's go to oil. Oil, remember, it was just classic crap last week. Broke tanking, went up, did the double, came back, test tanking, we're back here, right? We have EIA out tomorrow. And you can see there's a constant thing, and this is all on tradescommunity.com. Go to Round a Barrel in the Vortex. You got some of the biggest people out there putting stuff on for free. So do yourself a favor. Understand what's going on fundamentally. It's all covered there. Read it, understand it, make your own opinion. These are violent markets, and you got very old and incompetent people in this space in a number of countries. Now, at commodities, you got to keep an eye. There's been a change of government in Australia. That's your biggest commodity producer of a number of these things, right? If you look at them in like iron ore, natural gas, etc., biggest producer of gold, it goes on. The relevance is you're now going to get a lot of politicking before China trying to get some ground back and all that. So what's that space? That will affect natural gas, iron ore, metals, a lot of the foodstuffs. What's your Aussie buck on that? You've also got actually on that, you have a central bank meeting tonight in New Zealand any minute, and they're expected to raise again by 5%. We know New Zealand's tiny, but the relevance is the currency gets played around a lot. Obviously has a relationship with Australia and Asia and all that, and things like dairy, toilet paper stuff, believe it or not. So we did that. I guess we want to look at gold. Gold's significant, what's been going on lately. It's one chart I want to show you before we do that. This is that oil move, right? It actually got to minus 43.14 was the low, right? On that day where it got all stuffed up, went negative. Which if I leave Madavi alone, he's going to dribble on about this is the greatest trade ever in his career. He's going on the Hall of Fame desk, except no one told him in Cleveland. He gets his Hall of Fames mixed up. So apparently he's going on with Motley Crue. Or have they already been called up? I really have no clue.
Oh, yeah. Watch.
But anyway, look what happened. On here. Okay. Put your bib back on. So you need to look at this chart, dribblers, and understand what really happened, right? And it's here. It's all here for you. So KSA goes into their price war with Russia. And this is a laughable thing. If anything thinks OPEC Plus is anything about just appeasing each other, right? And if you don't think the Russians have the foot on the Arabic world here, you're kidding yourself. Because just look what's happened since. So it outplays. They get in a price war. COVID happens. This whole negative was all caused by... they'll tell you it's USO and everything. It was really caused by that whole Bank of China and that was all because of exploration. Anyway, it starts going up. OPEC starts cutting. US production falls, right? All the ESG stuff and all that. Look what happened. This is when Biden wins. It is the low, absolute low. Look what it is. $30 freaking dollars, punters and dribblers. $30, right? He wins. The bloke gets in charge. First thing he signs, Biden culls the pipeline. We all know what pipeline we're talking about, the one between our friendly neighbours in Canada. He bans new drilling on federal lands. But, punters and dribblers, oil companies are gouging, right? And we had the woman he put in charge, her name escapes me, and I'm sure she'll go into history and oblivion. No idea. They put her in charge of oil and gas, right? Look at this chart. Just look at it. Beautiful, right? Because it's all oil companies' fault. They were having parties down here about them all going broke. Exxon, the whole lot. Exxon, by the way, we found out last week, is one of the best performers for ESG. It's in the top 10. Elon's out. Elon's not happy. That's time for another. We could dribble all day about that one too. Anyway, this happens. Just look at it. This is the facts. This is the numbers. It's hardcore. It's with the Murray. It's with the fibs to show what gets on. This is where the illustrious one puts, and we are now at an all-time low SPR. The illustrious one starts selling our SPR. Two, I might add, to give you an idea how much bullshit, guess who bought most of their SPR? The evildoers over at Exxon. There you go. Thank you, Lord. And pump. Look where we went. 63. We are at $95. Just under 100 right here when Putin falls out of his cancerous coma, decides to attack the Ukraine, right? This is at $100. So let's backtrack here. Minus 43 to 100 before you can blame Putin. So I'm no genius at maths, but Madavi, correct me if I'm wrong, but that's $140, right?
Oh, yeah.
$140. If we take it from here, right? KSA, Russia, right? China, not the Republic. We're not talking about the Chinese government. This was the Bank of China. They flogged oil as a safe investment to so dribblers are everywhere. All the dribblers in China. Oh yeah, we're on that. Shit, what happened? Oh, no one told us we had to roll. Oh, so then, okay. So if we leave that alone and that's obviously the Russian KSA price war. KSA price war, because They needed it, right? US production cuts. Banks say you got to stop producing. ESG says you can't lend these bastards any money. Oh, that's their fault. Biden wins. Okay, let's take it from Biden. $33 to 95. I'm no genius, but I think that's $63 right there, right? So, okay, let's put this one on old Vladimir Putin. So he's got that. That was for, this is weekly, right, boy? Daily. That was 4 days. We've pretty well wrestled all around between 95, well, let's call it sans 105 as an average in all this. So $10 of this is Ukraine, Russia. $10 of this whole thing. So when you're looking at companies as an investor that you're buying in, you got to look at the values and what's going on politically. So this is oil. So this affects bond rates. It affects inflation. It affects bonds, stocks, you name it. Political decisions between all the producer and user nations. So this is a major furphy blaming this on other people. And you can see why they're trying to misdirect. And we can say this is all for people to go to electric cars. Well, all that can't be exactly true if Tesla's out of the ESG, right? So it's not perfect. Yes. Here's the thing. If you could drive an electric car that didn't require any energy, right, and you didn't have to make the battery from lithium and other rare earths and destroy the environment and not be able to do it and make it as toxic as nuclear, hell yeah, it's wonderful, right? So that game's already coming undone. And so you need energy for all this. So all this is unraveling. So the extreme right thinks all this is because it's some big plot to get rid of oil companies for the whole years. You're saying, well, that's been showing up to be a facade and all this and you know, on so many of it. So understand, most rational people want to get rid of inflation. They don't want to have prejudice in a workplace and all that sort of stuff and fair wages. That has got, by just having no policy and populist thought on both sides, I understand they're as freaking bad as each other, right? That's how you get this. So, as Madavi would say, don't trust any of the bastards, right? Because that's what happens. But you couldn't get a clearer picture of what's gone on, I don't think, people. And I have been an ardent buyer of energy since here. I mean, have I not been, Johnny? Companies, the equity, because it just, you need it and it couldn't go down and it's fact. And just government incompetence, from lockdowns to populist policies to provoking wars. I mean, it's all gone on. Anyway, that's pretty well our stuff there. Do we need to look at, I think someone, we wanted to look at this. Have a look at that guy. We love this guy. Love him. Is there truth in a rumor you're getting a tattoo of this, Madavi?
Yeah.
Well earned. We have a good friend of ours, John, who he probably don't mind us sharing this. He did kind of well out of a bear market a few years ago. He got a big old bear tattooed on his calf, out of respect.
Yeah, loves it.
So everything I just showed you on oil, and I went a little bit hardcore for a reason. Because what happens is people that don't understand the market flow into it. So understand this. If you're from oil and gas, and you've been in that stuff a long time, right? Now, aluminum, whatever you want to call it, none of us are big traders. We have traded Alcoa over the years. We did really well out of it, and we got out pretty early here. I'd have to look, but it was either 70 or 80. Do you remember, anyone? But it was way, way early. So you look stupid, but look, technically, people keep buying it, shortage. At the end of the day, we're in a world recession as well. And what happens with commodities, they produce too much of it generally. That oil was a glut. There was a reason it went down. So here's a good lesson of caution. If you're buying energy stocks up here, look what Alcoa did. 98.50 went all the way to $53. This is a weekly chart, so that's just around 2 months. That's a bloody big fall, right? Now, the dribblers on TV or on FibTwit, they shut up about it. But they put you in this. And they don't trade. They don't have money in the game. That's nearly a 50% fall, right? So that's what happens if you get ahead of it. Like gold's one we liked, right? I'll show you gold. And I'll show you, if you remember how we traded it. Well,
did you go over the SPOOs already?
Yeah, we've done all that, mate, while you're sleeping.
Yeah. I just wanted, because it's like running right now, I just wanted to ask about the next level.
Well, while we'll go through that again, but everyone, you can go back and watch these on YouTube. And remember, like and subscribe. But we'll do that. But let's stay on track here, Johnny. Let's stay on track, mate.
It's okay. It's okay. No, it's just...
This isn't the metaverse.
It's kind of pulling away right now. I just wanted to see it live in action.
Mate, it's just been dribbling up, as we said. Just rolling up from that bottom. And it's testing the tanking on the daily that we talked about. So let's stay on track. So we had a glorious break on gold. So we got a friend of mine's kind of a massive long-term bull, and he's been buying it since down here. I don't know. I forget his name. He goes by the Golden something. Anyway, we broke this here, right? This is one of the easier trades you'll ever get. It did all this pennant. It went exactly to the double top, right? Exactly. Plus 1/8. We marked it as two possibilities. This is going to be the easiest buy and sell you're ever going to get. That's $270. Boom. The dribblers, they start buying this shit here. But look what it does. In like clockwork, corrects A, B, C, right? Spits the cloud, and here we are back over the 50. Now, understand, the smart bloke's buying it here, selling it here. It's kind of like on the stock or anything. To buy it, if you really wanted to accumulate any commodity, be it oil that we just went through, natural gas, gold, there's limited supply, right? In the things we're talking about. You either use them, consume them, like food, wheat, oil, gas, gold. Some of it's used in teeth or in Hindu, but basically it's a store of wealth, like a money, and it's limited supply, right? There's only so many meteors hit the earth. Even though I think we're due for another one. If God, I don't know, I think God must be going, what the freak with this lot down there? And Jesus goes, I ain't going back down there. Anyway, let's not get into that. But you can see classic ABC. What do I always say? Watch your ABCs. So now you can't get any more clearer where if this is bearish, it basically has to get under here and run. Right? If it breaks here, you can see what it does. So think of what this is talking about. So gold traditionally is a safe haven and a protection against or a store against inflation. Now it got out of favor because the ultimate dribbler thing was created, probably the greatest Ponzi since tulips and I don't know, half those stocks they ran up before. What are we talking about?
They love it.
This little thing. So look at this, and you've had a number of big people coming out, like the head of the ECB, she's come out, Lagarde, if you put any weight on her, but some other big bankers that say this is worthless. I don't know if she said Bitcoin, but crypto generally. So what's happened is you've got an obsession of people with free money. There's so many of them buying this stuff on some hope. And for a transaction that's way out of any reality, right, of cost at this point. So look at this. The reason I'm saying that is I want you to look at this. And now you look at this. You see the relationship? Yep. So here, all this little big pennant, that's when they took, look when it was, July of last year. Then we go back to Bitcoin, July. Look at this. Remember this manic wave? And this is the gold of today, the gold of the future. So that's pretty well the bottom of that whole thing. And look what Bitcoin's done ever since. What's the difference between Bitcoin and gold, my David?
Oh, Bitcoin is, a little bit better, maybe the dollar but not much. Gold is a standard where...
How is it? Hang on. How's this better than the bloody dollar? Are you looking at the same thing I'm looking at?
I mean, they're all worthless. But, you know, at least this one you do electronically. You know, the other stuff I won't even put in my bank account.
Oh, you mean that bank account they're watching? Boom, baby. Anyway, all jokes aside, the point we're getting to, you're seeing the shift in market beliefs. Now, you'll know if there's anything to it if gold doesn't break down and Bitcoin doesn't bounce. So just keep an eye. You got to keep on all of them. And the reason we showed that aluminium, Alcoa, that whole thing is when you get in something, understand what you're in, make your own decision. Don't just follow dribblers. Be them some dribbler on internet, you know, on Facebook or by Twitter or Reddit or Kramers of the world that really, I mean, they just don't know when to shut up is the best. And that's one of the most important things you'll ever learn in trading. Some of the best trades you never do are your best trades, right? So you got to be in sync with what you do. You don't trade all the time. Dude, I didn't trade yesterday. More important things. Did I miss it? I come back. My mate here gives me a call. Driving up the mighty 45. Hey, you snap. See, if you have a good structure, you'll get rewarded like that. You know, and every now and then you'll get run over on something. So that's why you size appropriately. But when stuff starts working and you see the whites of their eyes, remember you're a trader, right? You're not doing this for peace, love, and understanding.
You got to go all in right now.
That's a hell of a good style by Elvis Costello. Okay, so the great man is waking up out of his slumber and he's yelling at me for saying naughty things about Bitcoin. But hey, let's go over S&P one more time, because in reality, this is the most important thing.
You got to buy yourself some Luna right now. Those are the stable coins, mate. You're going to love it. Absolutely wonderful right now.
You know, did I tell you this? Luna, she's a smart dog. I told you that. She is beyond pissed off right now that they ruined the name. I mean, it's not like a human. Like, you got to remember.
I mean,
a dog. Yeah, so a dog can't go down to change your name at the bloody DMV or wherever you do it.
Johnny has to change his first daughter's name now from Luna, something else.
Hang on, you just called my Luna Johnny's? Wow.
No, Johnny's having his another baby. You know?
You can't. Yeah, I forgot about that. Yeah,
Luna now.
Yeah, she can't be Luna. Or Tether. Tether's probably not a good name.
Yeah, Tether, no. There's a boy. But it's a girl or a boy, Johnny?
So here we are, Johnny.
The name's going to be Ether, so that's right.
Ether?
I was talking about it the other day.
Doiji.
Doiji. I like Doiji. That's a good word.
That's probably. I got a feeling Elon's got that earmark for his next kid. I think he's at 8 at this point.
Shiba.
Anyway, let's stay on track, dribblers. So Johnny asked us about, because he was sleeping. So he's asking us about S&P. So there's a reason why, if you remember, didn't go short in this session here. Once it started buying, all the other reasons we went through, failed to do the double top, we got over here. We're actually over the tanking. Now, generally, it spits, right? 1, 2, look at them. It usually does it 2 days. See that? Because dribblers take a bit of convincing, because they average. We're talking about stocks. So you'll see this even more so in the more dribbler, riskier versions. So we're going to see if it can run from this tanking to give us another sell down on the daily chart. On weekly, you can see what it did. It held. That's why it was so important to keep breaking down today, to get under that low, remember? It didn't. So that makes that a head and shoulders basic reverse. So that green spug, you need that to go down. If you go to your 60-minute, you can see what this was pretty clinical last few days. This is Thursdays. And we went through all this earlier a little bit more in depth. You saw it run. Today, we couldn't get down to those double bottoms. Remember the double bottoms we're looking at over here on the 12th. the 19th, we had the stop run. And you always look at stops. This is where it's a great buy. Most breaks are false, right? So you get this massive spit. It went to minus 5.8. It was one of the great buys. Then we had the sell-off on the snap.
So do you have anything that shows what's happening right now as far as
this is what's happening right now. You kidding me?
Okay.
Have a look at this chart. What's the price?
Okay, so so I didn't know if this is live.
Yeah.
Okay, so because right now it's starting to test up here.
Yeah, it's trying to fill that gap we talked about, right?
Hey, mate.
It didn't look like it would do it, but here we are already. So the gap on cash is 75. We're at 65.
Hey, mate, how about the other earnings? Macy's, someone said.
Oh, yeah. So that's what happens when you're asleep and you wake up out of your dream. And, man, no, that was last week. But then we realized that his wife had just got home and she throws the bloody checkbook on the table and she's just been spending all the family money at Macy's. I don't know. I'm trying to support you here, mate.
Someone said it was Macy's earnings. Got me. Oh.
So we did. So, yeah. So, note to self, be sure what you're talking about. Okay. We just looked at that gap. So, look where it is. So, if we can get through that gap and get up here to 8.8, which is 39.84. Remember, this is cash, not futures. The futures are going to differ, so you always should know your differential. I mean, in a perfect world, if this got up to this sort of level, 40.20, and this was a bear market rally, you got to remember, in a bear market, you got all this supply caught above where they're paid overs for. As I said, if Snap bounces 100%, it only gets you to $25, $24, right? So that's how much people are underwater. And bouncing 100 is a pretty damn good effort. And look how easy that thing just got wrecked today. But people are constantly buying that. So greed is a very powerful force, right? So people only think, they don't think of what they're going to lose because there's the despair's already set in. Denial, all this. We're in the early stages of that. So they're more concerned about missing out on what goes up. So that's what feeds these rallies. That's why we use Murray and everything else in Novawave, how it conflicts together, right?
So at the 39.64 where it is right now, if it goes up to the next level, which is, it looks like 39.84, 39.85, is it a buy, sell, or
so that's what it. So just think what's happened, right? Everything I just said. It's a pity you missed that session. What did it do? Market got short, failed down, got extreme bearishness. We could not get down to even test these two levels today. What does that tell you? It's exhausted on the short side. So we got a little bit more to do on the top, right? Potentially. So we're overtaking. Just look at what the charts are telling you. Look at what the market, and you know the fear. Most people lose. Most people don't know what they're talking about. But this is all it's humans, right? Humans. Psychology. I mean, if you what every trader should do is work on a ranch or a farm or a property, whatever you want to call it, learn how sheep behave. That's what you're dealing with. You think I'm joking? I'm joking. So what we're looking at, Johnny, in simple terms, you don't want to if that. You watch what the market. You let the market tell you. That was a 5-minute chart. So you go back to your daily and weekly, and you look at the potential. What we're looking at is this gap. Can it fill? It should fill, right?
If you have stock positions right now, though, and you are short,
mate, I'm not going to answer those questions. I'm what I have, right? You know why we don't answer them? We do not give financial advice.
It's not financial advice. It's a scenario. It's like a rugby
so
question. I'm stuck between second and third line before the goalpost, and the option is this. What's the best?
I would suggest you've probably never played rugby with that answer. But
no.
So again, A, B, it depends on your timeline. If you're long term, you're in a bear market, right? So you may have shorts on long-term play. If you're a short-term punter, you're trading for this gap, right? You know it held here, it got back over it, minus 1/8, and it's motored up through all this. This is a 60-minute chart. You then break it down to 5 minutes, right, punters? And you can see the tanking is what's holding it. So basically, if you are long, which should be the position you got, given all that scenario that's happened, see that? You are long as it holds this with you. You're aiming for that gap to fill. You want to give it every chance to gap. We don't, look, we're not runner players. We like to buy down here on support. That's why we do it.
But
if you get caught in... What do you mean
you got to somewhere? So, I mean, you guys...
What do you mean you got to
start behind? So what happens if you just got into your position right? Like take your little arrow, your cross, and go back about 4 inches. What happens if you got in right there?
Are you trying to tell me you're long here? Okay. So, if you're long here, you run your trailing stop under tanking, right? Because that's what's holding it. You can see the trend, right? All these charts are doing is marking it out. So, it was a nice 20, where is it? Here. It broke this little pennant, right? Came down and tested it, confirmed it. See that? And it's just running into that gap. Now, the way markets work, they're full of greed. So that people are scared, can't miss out. So we want to see that gap filled, and then we'll reassess it. But I'll give you a little tip. I'll be asleep. I'll venture tomorrow. When this sort of shit happens, I'm avoiding the market. And I don't like to tempt fate. We just got a gift from God with bloody snap, short of stock, and we pick up that much money overnight. Okay. I'll savor that moment, right? And
I'm
I
just
don't
thinking,
want to
if it goes up and keeps going along your curve, you stay in long, and then once it stops.
Well, this is a 5 minute chart, so you want to work it back to 60. So where are we? If we get stopped out, it's going to be around here. What we want to see is this gap fill. We want to see the market get long, and in the bigger picture, it's a bear market rally. Right, unless we're proven up. You don't know how far it rallies. That's the thing. That's why we don't preempt it. So we could fill this gap. This could be an ABC. We could run all the way up here. Or it could fail here. Right? So that's why we work it back on our maths. We want to see...
I'm just looking at it. So
well, I'm telling you, you want to see how it reacts. My advice is, this is a US market, right, that's been decimated from all this shit. People are getting destroyed, the dribblers. Look where it was. You wait back and you see the stock. The algos have no emotion. Yeah, in a perfect world, they run up here overnight. They've trapped people. It comes down, and you work it tomorrow where it's liquid market, right? I'm a big fan of liquidity. To me, everything I've just shown you tells me not to have a long-term position. That's why we took profit. That's why we're flat on SPOOs, right? So, but we have, like I got out, remember the length I put on was stuff, I did a little bit of SPOOs, but basically buying calls cheap and things like Walmart and that, right? Which I got out of too early, but. And the reason you got to sometimes get out too early is there isn't an options market. If this happens, just say this runs up to here tonight, to 40.40, right? Mm-hmm. It comes back, just say it runs up here. If I'm long Walmart, it ain't no good to me if it comes. By the time we wake up tomorrow, it's back to 39.30. Options market's shut, so my only thing's here. You see what I mean? So I'll tend to get out a little bit early. So futures you can run.
I want to try to catch the top, or I was near the top before a big drop, because I always get into the drop halfway down the drop. That's why I guess I'm saying, where do I know where this is an opportunity to get in? So
what am I going to do? Is that what you're saying? So
no, I mean if you go back to the previous in the middle of the page, the big drop right in the middle of the page, you see that big with the blue line, the chink out. Yeah, look in the middle of your page, right in the middle of the screen.
This?
Yeah, this huge drop right there. That's what.
So what do you notice about that? What do you see on the right-hand side? What number is that?
That is your 4,100 level, the 2/8.
Plus 2/8, right? So you know it's overbought. I think we did a thing on this one. I think this is Madame. I think we did really well here. I think that's where we put shit back on, right? because there was even a better situation in Nasdaq. So what it was, you got plus 2/8. It went under that high, and your safe trade, your very safe trade of all this, was this happened, this failed, it came back and retested, it failed, was shorting it right here. Obviously, Johnny hindsight, actually, I think we might have shorted this because this was the close of the day. Yeah, we did get short up.
Yeah,
here.
you did. That's why I was
saying.
Yeah,
so on the
perfect setup, and I got in halfway down.
Because on the 5 minute, this was plus 2/8 and it was right at settle. But just so you miss that, you wait for it to retest. Now, yes, you didn't get it, but it's safer. Like Madavi does a really good job with once stocks are running, right? Futures, same thing. Except this is, so futures are going to have a mixture of pros, just destroying it, hedges that have to sell, and dribblers trying to, they'll tend to. So you can see what it did. It basically went vertical to here, to minus 2/8. It was a classic. That's 100. That's an 8/8 measured move. So it gave you the sell here and here. And that was 38.6. Yeah, that was a good trade. 140 handle.
That's why I was looking for a setup like.
So, okay. So if we're talking about right here now, this is like.
Yeah.
So the first bit we're looking is the gap, right? We do everything in ABCs. 1, 2, 3. 1, 2, 3. Right? So in a bigger picture, in a perfect world, you want to see this go higher than here, right? In 3, it gives you an ABC up to a level. In your perfect world, you get some double top here. That'd be a big ask, but you never know when greed gets involved. There's always a percentage chance, right?
In a bearish market, isn't it more likely though that it's downward trending as these movements, these big downward trends are getting smaller, but they're still going down?
Okay, what's one on that? One thing Madavi is been 100% spot on, better than most. What does he say? In a bear market, the rallies are fast and go further than what you always think, right? Because you got all the averaging and people just hope, and you know what I mean. So they actually go up more than what you think in term of price, but short. Yeah, they're very short in time. So one day there was actually a long one. This last one, it started on Thursday morning and rallied all the way up till halfway through yesterday, right? Almost to the end of the day. So that was 2 days, right? 2 full days.
Yeah, that's what I'm trying to make sense of
There's no sense in greed and fear.
Yeah.
Right? So that's why you
use VIX and your...
No, don't look at it. Look at your Elliott wave. Look at a wave play out. Just look at simple ABC. Look at your Murray math. Just look at your bloody Nova wave. Look at your Murray math, how it reacts with Ichimoku and with the pattern on hand. And you'll get to know the patterns. Look at these patterns. It's just a trend line. Failed top. Right? Couldn't go higher. I mean, look at what this is telling you. They've run out of sellers. Just play it. Think of it logically. If you're playing football, you're playing rugby, the other side's tired, they're battering your line, they don't score a try, right? You get the ball back, you're fresh, you've just been they're demoralised. Shit, this thing ain't going. They've given up. Boom! That's where you score your try. In gridiron, this is Tom Brady. Boom. Okay, my turn. Bang, 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 bang. So it's all psychological, right? Now, if you're Alan's saying Tom Brady's shit. No, anyway, we're joking. But, so does that make... Just think of it. If you want to be a great trader, you got to think of it hard, clinical. You don't get excited at these levels. You're looking, okay, shit, this is way overdone. This isn't going down anymore. This is what this stuff's telling you. You see the dribblers, don't buy this.
Do you think we're not going any lower than the minus 5/8?
So you didn't hear a thing I said, did you?
No.
Well,
you didn't hear a goddamn thing I said. I just described we're watching what this has done. There is no easy answer. And I'll give you a little tip. On a free YouTube, I ain't giving any bloody prediction. Are we, Madame? We spent a whole... It ain't financial advice. Gamble responsibly. Gamble responsibly. All right?
There we go. We got him.
Gamble responsibly. Because if you do not have a plan, If you do not understand what this is doing, you are straight out gambling, right? And you're going to have more fun going to a casino, getting free drinks, hoping some sweet little honey likes you or sweet little guy likes you and doesn't rob you in the morning. But seriously, everything I just said is what you're watching. It's patience. You wait for it to set up. Yeah. You notice when it's a 3 or a C, we're balls to the wall, short or long, right? When it's not, you let it play out.
I shorted Nordstrom.
And you notice when we get into the stocks and that, when it's there, we're not in them all the time. So we have the DDDs, which are basically, it's a bear market, the shittiest stocks that we think the dribblers are all in, and we pound them, right? When it's there, we take them off for a reason, right? It's a value play. We know that, what do you call it? Snap's one of them. Path was another one. Palantir. There's a bunch of them, right? They're all on the list.
I can say the whole point. They're all overpriced until...
Right, yeah, but they're not in the DDD. And if a company's making money, they've got the right number of shares, economy, they don't get in the DDD. That's a special... To get in there, you got to have a certain number of shares.
A little secret, mate. When you have a bank that the country's named of, and could go down to 50 cents. What do you think the rest of these stocks?
Well, hang on, this isn't 2008. This is 2022. So you got different beasts at work. You will get those plays.
I think this time's going to be worse. I said it here. I predicted a couple of things already, and they're coming true so far.
Yeah.
This one, it's on tape again. We go listen to it. This one's going to be worse.
Hey, it could well be, but we're talking about disciplined trading here, not punting the So we're talking about the DDD. So anyway, does that answer your question? So what we're seeing before we even... Eventually, unless this is the bottom, like a massive C wave on that probably 9 to 11% scenario possibility, this gets broken, to answer your question. How and when is what you want to know. Right? How powerful is this correction? Mate, it might just fill the gap and shit itself. That's a technical term, people. Right? That's all it may be in it. I'll give you a little tip. If it can't even fill the gap, then Madavi's scenario is going to happen quicker than what you think.
Oh, yeah.
Right? But what we want as traders doesn't always happen. In a perfect world, we would like this to get up, get them more... Right? And you're patient. Some of these stocks are going way more than what they should. Some of these dribblers. Snap should never have stayed up as long as what it did. The things like that Bumble and what was that, Etsy? How do they get up as high? And then in one day, they're destroyed. The hard thing is staying in them. We had puts in Etsy. Do we go another week? We didn't. So it's a hard decision. You can't always be perfect. Look, if you just got wads of cash falling out of your back pocket, like the glorious one, you can be in everything. But if you're a hard-collar, blue-class, working-class man like me, you can spend steel mills at night, you can't stay in. So anyway, look at this. So you want to keep it as simple as what I'm saying. If you already are in the mindset it's going to break this without mindful of this, you're in a hiding to nothing. You'll get it right every now and then, but you're going to get blown out by moves that you don't see coming. This was pretty bloody easy one, really. This was real easy. Today, let's go back to a 5-minute chart and analyze what happened. And that's what I said. Every trader should have a trading book. I don't care. I still do it, and I've traded for a few years of what happened and what went wrong and what went right. Why did this hold, right? What speed was this on? And so you see this pennant, it's a continuation, it broke. Reverse head and shoulders, whatever you want to call this shit, right? But what happened? And here's the thing, if you miss this, look at this line. It came back and retested it. Markets have a way of doing it because humans are predictable in an unpredictable in a predictable way. So we know the bear who stops out here, instead of buying here, right, He's selling, oh shit, I shouldn't have got out. If you look at it objectively, you can see that's the break even. You know, most traders just go for break even. That's why it tests a breakout works. If you're a bull, you might have spat it all out here. Who knows? You bought again here. You shit. I mean, that's the psychology of most people. They get put through the, what do you call it? The washing machine, right?
Yeah, they love it.
Or some people call it the popcorn machine. So that's why you stand back. So when you get chopped, the smartest thing to do is just walk away. There's a market every day of the week. You want to get most of this. You want to get the meat in the sandwich, right?
Mate.
Right, and this is clearly a rising bloody wedge, right? It's pretty obvious what it is, right? So then you come back and you think that and you go, shit, this is daily. We've held above the tanking. It shouldn't run, but it can. That's why you do the flyer calls when vol's low. We did it on Walmart and on the spoos. And we're out of them anyway. So there, that's been and gone. But you get, am I making any clearer it's how my mind works anyway. I mean, obviously if I've come up with Nova Wave, that's mathematically how my brain works, right? What I'm looking for. And if it doesn't work, I don't trade it.
Discipline, man.
It's all about discipline. W.D. Gann said, I can sit here and show you all how to make a fortune. You know, he goes through all his math. He says, and I think the number, it's either 85 or 88%. You got to find it somewhere. But 85 or 80% of you will lose, doesn't matter what I tell you, because of your ego, your timidity, your gambling, whatever.
Buy in my winning trades.
Huh?
I don't know how he does it.
No, he's not saying he makes money 85 to 88%. He's saying that he teaches you, and he was one of the few that died with money. People out there that are pushing their systems will try to say
right there to the water fountain, tell them drink, and they won't drink.
Oh yeah, you'd lead a horse. You lead a horse to water, and
they just won't do it. They refuse. Yeah. Then they wait. They wait for so pretend they're like a little dove. Right? They wait.
Well, he's a good example.
All the hunters are there, and they're going to shoot them dead. And that's when they go drink. I don't get it.
Well, here's a good example of the sheep. They go on and on and on about when you define a bear market. It's the biggest load of bullshit cop-out I've ever heard. Why do you wait 20%? A market fallen 20%. For a start, the biggest volume, the biggest number of people are in a market are in the top. The lowest are in at the bottom. So you wait 20% when the heaviest number of people are in a market to admit you're finally wrong. Give me strength. If you know what you're doing, you don't have to be short, but you're out. Smart players are out, right?
They got techniques.
You think it's an accident that the Bezos family, Mr. and Ms. decided to get bloody divorced at the top? Do you think it's an accident that Fed governors came out? Oh, I'm sorry, we're trading the market. Oh, we'll have to sell and comply. Oh, we're out. Do you think it's an accident that Elon Musk says, shit, we're $1,000. What can I do here? Hey, do you think I should sell some? Do you think it's an accident? I mean, grow up, people. Do you think it's an accident that dribblers keep buying this shit when smart people are selling? Oh, they're dumb, they're stupid. Do you think it's an accident that the thing that keeps going up, that people are short, the dribblers get in for one day and try and squeeze them and giggle and laugh at each other when only a few of them even manage to get out? I mean, grow up. But that's the real world. But hey, it's not a bear market yet. Okay, that's today's lecture.
We don't know sick people like that, I guess, you know? Bad people.
Well, what we're trying to say is we're not trying to be dicks about it. We're just trying to be, that's how, if you've been around, you've seen it, because we've all been through it. You've almost got to experience it to find it out, right? We're all humans. So we try to do discipline, and the only way I personally know how to do it is to control emotions, know what I'm in, follow a system. Boom.
Who do you hang out with? I don't want to be around those people. Bad.
Well, that's 85% of the people. And and here's the thing. In a lot of the hedge fund people, you got to understand, Melbourne's a good example. They only get their gig because of who they know, what school they went to, and all that. They're not so that's why you get your really good blokes and your other ones that want to do background deals. We're not going to dribble on all day, but the whole purpose of why Madavi and I do this is to try to give an insight of the market from a professional side, not hobbyists that sit down and follow it and read it and they got a second thing. That ain't the real world. And all telling each other, hey, I know we're all down, but we know what we're doing and we're all going to keep up with the Joneses. That isn't the real world. And I'll give you a little tip. They ain't going to pay your bills when you can't pay them.
Oh, yeah.
They ain't going to sleep with you under the bridge when you got to sleep under it. They're not going to share your bottle of metho, right?
Those are not nice people.
That's for the Australians.
They are mean people.
Well, that's the whole point. It's a ruse. Anyway, we kind of got off on about 72 different tangents. We went up, we just dribbled and dribbled and dribbled. But anyway, I hope we answered Johnny's question.
Thank you,
the point we're trying to do. Like it, subscribe it. If you're one of the glorious 105 people that actually listen to us and like it, we love you, we thank you. Do we love you? Strong bloody word.
Don't hang out with people McDonald's because they're evil and bad.
At where? At McDonald's? Oh, that's
bad ones.
So we're going to investigate Wendy's a little bit more. We're going to look for the next snap, I guess. Anyway, have a good day. Remember, you don't. So here's the thing, Johnny. If we don't fill this gap, that's pretty piss weak. Usually they fill. I find it hard, usually they fill.
Just buy yourself some Nordstrom and hang on.
hang on. I thought you were short. Nordstrom. Okay, punters and dribblers, thanks for joining us. 110.53, 39.62, 773. Big news, Johnny is out of his sleep. Vol 29, 118.49. What is that? They call that the Nasdaq, 891.17. This is one that's at massive levels on natural gas. Very, very significant levels, right? For so many things. So heat your house, pay your bills. Good night. Bye now.